Good morning, everyone. It is Tuesday, December 28th, and this is Morning Market Movers, where we do live analysis for day trading. My name is Todd Rich. I'm with Nadex. With me, Brian Caprice from Keep Trading Simple. And we do have some things moving around that we want to talk about today, namely oil moving higher. We had that great rally yesterday. In fact, I think uh, I think that was on the heels of the CDC guidance, not mandate, but guidance that if you're asymptomatic and you test positive for COVID, or if you are contact traced, that if you're asymptomatic, your quarantine isolation time is cut in half. They're taking it from 10 days down to 5 days. Now, that's just for people who are asymptomatic, but certainly encouraging that maybe because the way that Omicron is impacting people, that I don't know. They're just saying maybe you don't need to. Now, if you're showing symptoms, uh, it's the 10 days. If you got the symptoms, if you've got a cold, if you're feeling achy and sick, and all those, and believe me, it's not a walk in the park. But
Oh,
for
those change, yeah.
many, yeah, for many people, they don't even know they
Mm.
have it. When they're showing absolutely no symptoms, their quarantine time is cut in half. Encouraging news. You saw equities setting records, all-time highs. You saw oil take off. Oh my gosh, demand's gonna not be crushed. So we've got some things moving along. But before Brian and I jump into it and we take a look at the charts, I do need to share this disclaimer that trading involves risk. It may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. As I mentioned, I mean, just a quick, if we take a look at how oil sold off at the end of last week, we and I haven't changed. This is drawing is still here from when we did this last week. These are the fib levels. I've just drawn them out further, and it's fascinating how fib works. It did make the retracement. We can see that we retraced it all, and then that level actually acted as support as we know yesterday we gapped lower, came down, and still found that
Mm.
support at that same level, but then we just took off. Hey, things aren't going to be quite as bad. Maybe there's going to be some people who are going to still be able to go out there. And then up at the 161.8 level, that's where we met our resistance, which was just shy of that number Brian had mentioned, just shy of that 77, so two reasons why we met resistance there. It was a critical fib level, and it's that 77 level, but this is crazy. We're heading right back up. Oil, uh, maybe the demand is going to be there, and it'll be kind of entertaining to see how OPEC responds when
Mm.
when we hear from them next. Anyhow, we're going to talk about oil. I'm going to let Brian go through these charts. Then we're going to talk about the metals and then equities at all-time highs. It's certainly that Santa Claus rally we mentioned yesterday. It happened. We hit some levels and had some pullbacks. So
Mhm.
Brian, I'm going to flip it over to you, and let's do the commodities first, and then we'll finish on the equities.
Sure. Yeah, I mean, first off, looking at all the headlines out there, there's not a ton. Biden signed a defense bill about, I don't, it came across all the AP news and everything about 7 hours ago. A 7 point, I'm sorry, not 7 point, 768.2 billion. So lots of money being spent on security. Um, that's the biggest headline out there. And then it's funny, you hear there's an article that says, will the Fed raise interest rates in 2022? It's like, huh? That's kind of interesting. Really? Everybody's pretty much under the assumption that it's going to happen two, maybe three times. And now there's articles out there talking about, are they actually going to raise it? So interesting, but for the most part, the only news that we got really, and again, this is with all the news, lowest impacts out there. The only thing we saw was BOJ core CPI. The year over year is zero point 0.8. So again, they're not where we are, but things are a little bit different in Japan. Again, with their inflation, it's a little bit different scenario with their growth and everything. But again, still higher than expected. That's kind of the common trend. But today, there's really nothing else out there. API, Richmond Manufacturing Index. None of these are blockbuster news out there. Now, yesterday, this is the oil chart. This is a 30-minute chart of oil. You can see yesterday we were talking about how it was rather flat. We didn't really see much unless there was any type of a headline or anything. It looks like right around 10 o'clock, between 10 and 11, Oil took off,
Boom.
and yeah, it was a $2.30 move. $2.30 is more than typically what an inventory report would go with a major miss up or down. So again, it just shows what low volume trading can do, the volatility that can be associated with it, with any type of news. Now, what the actual specific news was, you could say that it was the CDC recommendation. Again, in this lowly traded market right now, low volume traded market, there's really anything that can push it higher or lower for that matter. So, again, the fact that it was kind of a positive step in the right direction towards demand is why we saw the pop. With the price rising back up again, it will be very interesting to see what OPEC Plus has to say next week. And again, remember that would be next Monday, I think. Is it next Monday? Where is it coming in? OPEC Plus, yeah, January. I'm sorry, next Tuesday, January 4th, a week from now.
Yeah, because a lot of people are taking Monday as the holiday still.
Yeah, so it'll be interesting to see where we go with it. I don't expect them to change their trajectory at all. The last time that they, there was all that pressure that, hey, you need to produce more, they released, some of the strategic oil reserve. OPEC was kind of unfazed with all of it. It just shows that how volatile this market can actually be. They love it. The fact that it keeps going higher and higher and higher. This is, going right into OPEC's hands. So, I would say the next real major level, there's two things that I got to look at here. Obviously, the 77 was a level we'd mentioned. We missed it just by a little bit. I would say for the next level of sells coming in, I would say that 77.93, right around that 78, right before it actually, is the last time that we had really kind of a strong push down. You can see that this was kind of where the basing was before collapsing very, very fast. And again, this was November 25th. But again, very strong push to the downside. The next level will be this level, which we've talked about in the past. It's hit it before, the 79 level. Had a decent top, and then again, one confirmation there. So that would be kind of a secondary level up here. But I'm looking at 77.93, and then also looking at 78.85. There are kind of two top sides if we have any more rallies looking for potential reversals. As far as today, this qualifies as a parabolic move, okay? Not really tons of news. Again, low volume is kind of what caused it. Could have been a little bit of manipulation out there. But I do like how the price rallied very, very strong up in the U.S. session. So again, U.S. base level. It started the base, and it came down and based again and popped again, and then hit it again, and then hit it again. The next time we come down, this would be hit technically. I mean, you could say if this is the first pullback on it versus the level, this would be hit number 1, so this would be hit number 4. Either way, we're going in that hit number 3, and then we have a racetrack below. So one of the scenarios I'm looking for this one is a bit of a retracement here. And again, 1 to 3 is only right here. So you can see there's so much. This is such a large move versus the level of risk on it. Even right back down, I mean, first conservative target would be a 1 to 7.7. The final target would be a 1 to 9.7. So again, quite a large move either way, however you're looking to take it, but it would be a break of 75.45. Looking for, again, if it bases in there, great, you can take it short early. But typically, we like to see the little Harry Potter, the little lightning bolt, push into the downside. And I think actually the lightning bolt, you can never find it. It's, let's see, where did I put it? Oh, right there. There we go. It's kind of the upside down lightning bolt in this one. But again, that bounce and then pull back, right, is what we're looking for. So
yes,
potential setups to the short.
And what is that? It looks like, I mean, on my chart, it looks like it's just north of 75.50.
Yeah, 75.45.
Okay, so right, so right there around 75.50. Yeah, because it has hit that. Oh, so it's a little bit lower. I got you. Yeah, I mean, it's 1, 2, 3. This might be the 4th time they try it.
Yeah, it's arguable if you count this as the first hit, because it base came back and then hit it again. So, but it's the big candles behind with no pullbacks that I'm really attracted to. That's the ones that I really like. And again, we've already pushed up, and now we're starting to see that reversal at 6:30 pushing back down again. Again, we do have oil inventory tomorrow. That's kind of like the biggest real headline that we have. It's not considered a major impact this week, but with news something like we're cutting this from 10 to 5, and which was funny because yesterday we made the comments that how healthcare workers, theirs was reduced, and now everybody's is reduced. And I'm actually there was actually an article yesterday. A friend posted it, and I found it, and I kind of read it, and it was interesting, talking about how the communication between things like the teachers union and the Biden administration as far as recommendations has been a little bit too close, and that people are now calling them out, that some of the guidelines were probably more political decisions than actual true recommendations. And there's some emails that have been requested at this point of the communications between, I guess, the teachers. I don't know if there's a national teachers union, whatever it was, but basically some of the recommendations for schools may have actually been more politically drawn towards a union versus actual CDC guidelines. So who knows? Everybody's going back down to 5. It doesn't matter what you are at this point. And we said,
Yeah.
yesterday it would
That
be
was what surprised me.
airlines, teachers. Again, it would be all the people that are basically all of the support people, right? We
Yeah.
haven't heard it yet, but hey, I mean, how long is it going to be until they say, yeah, we're shorthanded for firefighters, so the response is lower, police officers, and whatever the
And then the CDC just simply said, everyone.
Yeah, you need less than half. We'll just cut it in half. Yeah, it's okay.
It would, yeah. Although they do have the asymptomatic qualifier on there.
Yeah, well, yeah, and what I saw was if you are symptomatic, it's 5, and then it's 5, and then you're required to go back for 5. Basically, what they're saying is Omicron is actually hitting us is more infectious on the early stages versus what Alpha and the rest of the variants were. That you're actually contagious 2 days before symptoms. It used to be once you got symptoms, you were contagious. Now it's 2 days before and 3 days after. So you have a 5-day window around kind of that. I have symptoms, don't have symptoms. So the fact that it is moving faster is interesting. And this is something that I mentioned actually 2 weeks ago. I was talking to my wife. I'm like, Omicron has the potential to be a kind of a turning point with COVID. This may be the peak. If you remember back, and I understand that movies are not real, but when you watch movies like Outbreak, right, where they're talking about this is great. I don't need to go there anymore, right? The virus was so contagious, so aggressive that it basically wore itself out of the system, right?
Right.
Everybody's infected. Well, Omicron is kind of getting like that. It doesn't matter if we have,
Omicron, until it mutates, and then it's not Omicron that we're worried about.
But the thing is, it may not. It may not mutate, or it may mutate in a smaller population now. Again, if everybody gets it, we're going to have an immunity to Omicron at this stage, and it may not have the opportunity to actually mutate past that. So it may not actually be a bad thing. Who knows? Nobody knows what the future is going to hold at this point. But the fact that they're changing the guidelines,
Pi, Rho, Sigma, Tau, Upsilon, Phi.
Yeah, we got plenty of letters left. Yeah, we got plenty of letters left. Right. Yeah.
And then what? I don't know. What comes after the Greek alphabet?
Well, but at the same time, it doesn't necessarily. It may not mutate towards a more dangerous strain. I mean, the flu is doing the same thing. Every year we get flu vaccines. Every year people get the flu. Every year people die of the flu. This morning I saw that we have the first 2 confirmed children. First 2 pediatric deaths of flu this year. They said the flu is hitting exactly when we expected to hit. It's going to peak at the end of January, but we've had the first 2 confirmed deaths of the flu, or 2 pediatric deaths.
Flu is going to be bad. I mean, because people have simply forgotten that they need the flu.
Yeah, it exists too.
Every year.
So will COVID no longer be the world-changing event that it is, or maybe now will it kind of pull back again, and all the mutations will be on the safer side? I mean, at any moment, flu could get really, really dangerous too. Maybe this may be the pinnacle in the decline of COVID because of Omicron, which would be great. Which would be great.
Yeah,
but again,
that was certainly. I think that's what did. That was probably the only news yesterday that would have really propelled oil like that in such short order.
It's the only.
Every day it's going to be headlines that just catch us by surprise. All right, so we took a look at oil. I do want to cover the equities because we're at all-time highs. But before we get there, I know that with oil, we could take a quick peek over what's going over on the Canadian dollar. Oil taking off the CAD.
Yeah, I would say actually before we. Yeah, I mean,
I know you want to look at gold and silver too.
Yeah. I mean, gold and silver, I think it's important to note, we're up to 1818. It looks like we finally cleared the barrier of 1800.
1800,
both of them are considered, at this point, both of them have put kind of bottoms in, and silver as well. Not only did it have a big pop, but it actually supported itself and has put some levels in higher. So silver's got a bit more to run up to that 2360. Gold's got some room. And again, we're in larger time frame kind of hiccup levels right now, but we have levels up here at 1823, again, pulling away. And again, why? Same thing. More people are working. More people are not on, quarantine. Again, that's going to, more people consuming. That's going to also drive inflation. We're at 39 years high. So people are looking at this and saying, wait, we're not quarantining as much. That's not going to slow business down as much. That's not going to hurt us as much. We're already at 39-year highs. This is one of those factors that will drive additional inflation. You're seeing it here. And remarkably enough, in the cryptos, you're seeing the cryptos react the opposite way. So again, the big money is stepping in. Bonds at the same time are kind of having some issues, but we're seeing gold and silver both continue to rally up when the cryptos, which used to be the inflation, let's go over there. Now we're seeing it back in the institutional setting again. Yeah. So interesting how we're going there. Now the VIX again, you mentioned it. VIX is actually up a little bit, right? But not, if you look at kind of where we are, it's kind of really folding back down again. Yesterday, it really just continued to collapse down. We talked about, hey, listen, VIX is down, equities will all be up, and they were. They all went to all-time highs. They all did have that 15-minute pullback like we talked about, and they actually, there was a couple of opportunities to get in. VIX is currently up, and right now we're seeing the Russell's kind of flat, and everything's like, what are we going to do? Are we going to rally again today? Are we going to do it again? It's kind of where we're at. NQ is obviously the strongest. It's up 0.3. But noting that the VIX is again starting to kind of push back down. We're at 1774. We've been talking about 23 just a week ago. So a great place that it is. Yes, you can see blew through all kinds of levels up top. We mentioned that we've drawn the arrow saying, hey, look for a pullback at the open. Here was the draw that we did at the open. There's the 930 candle. Hope to God you guys got this. When we went back, and I forget who it was. Was it Alan? Maybe. I feel like it was Alan. Was the gentleman that asked us to go back to S&P?
Okay, yeah, he asked at the end. Yeah. Asked for the S&P, and we covered it again. We covered it twice yesterday. Yeah, indeed.
Alan, here you go. Here was your 15-minute candle pullback into the 74.30. I haven't touched this chart at all. Here you go. We blew through both levels. I talked about 47.50 being a target. You can see it kind of hiccup there and then just continue to drive all the way through, and your launch point was that 15-minute pullback. So if you guys are looking to play today, right, kind of the same scenario. We're now collapsing. We do have some levels here, but on a 15-minute chart, you can say, all right, well, we do kind of have a top in here that may be kind of a selling area, but we also at the same time, we have a level of basing down here.
Right below it, yep.
Right. So the question is, where do we come to at the same time? Right? I guess we could do this here. You can look at this and say, well, wait a second. We got the 50% right around where a red candle is. Is there going to be some buying right in here? So there's a couple different small levels in here at the 15-minute. We're a little bit too early to do it right now. But again, it's the same scenario where price is pulling back before the open with the VIX just slightly up, but it looks like it's trending to the downside. It could provide some good potential. And again, we had all that positive news, and we've got Australian positive news with COVID. So interesting setup there. NQ also pulling back, but kind of the same scenario. You can see the red hiccup right here in the middle. Grab some fibs, throw some fibs on there. Look at that, right at the 61.8. So people will actually be looking at that level as a buy level anyway. So again, could be another opportunity. And whenever you talk NQ, jump across and look at Apple. You can see the Apple's down a little bit, but again, after the data it had yesterday, you expected to pull back a little bit, right? And same thing with Tesla. This morning I heard about, basically we did not see a slowdown. The retail sales numbers are great. All the early projections and the sales numbers coming in from the Christmas holiday through the roof. So all those things are good, and I'm pretty sure a lot of people got iPhones. So we will, I think these are all things positive. These things pulling back, I think it's a great day today. Again, I'm not surprised at the pullback after the huge push that we had yesterday. Again, it's just profit taking in a low, environment. If we can find areas to go long, they all kind of have a similar setup right now on the 15-minute where they're pulling back, and if we can grab levels, could be potential longs on all the indices again today.
All right. And remember, again, we've got liquidity is thin. Liquidity is thin. People are taking some time off this last trading week of the year, and anything can move the markets dramatically and quickly. Any headlines. So with that, any questions for Nadex, please email us customerservice@nadex.com. Brian is available at support@keeptradingsimple.com. I forgot to put my email address on there. And if you wanted to, I'm todd.rich@ig.com. Feel free to email me as well. I answer my own emails. Well, at least it's that until we close the deal with crypto, and I'll get a nice shiny crypto.com email address. That should be fun. I'm looking forward to that. What did we cover today? Just a quick little recap. We are seeing equities extend their rallies, looking for some buying opportunities on some pullbacks here this morning. Again, barring any weird news, anything will move the markets. We are seeing with what happened with the CDC announcing less restrictions and around people who are asymptomatic with COVID, cutting it down by half. We saw oil take off yesterday. People expecting demand to come back. We do have oil inventory tomorrow, so tomorrow should be an interesting day. We are going to have one of the few economic announcements this week that might move the markets. Yeah, and with that, we're also seeing the Canadian dollar make some moves. Brian and I will be back tomorrow morning. Thank you again for joining us in this holiday week. And Brian and I will catch you again tomorrow. Thank you so much, and good luck in the markets, everyone.